We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up GBP, JPY. We are on the 12-month time frame. Price action last candle to right hand side is a bullish green candle. Current price is sitting at 171.391. So we're looking for price action, lowest low structure, red and green. Going back to that red candle, looking at the areas where that market pushed up from the green candle to the following candle towards that high. So we can see that areas like a tight consolidation that's creating a pattern in that area. Also, we're going to add the midpoint. So let's talk about what's going on. So 12-month time frame, price action, bullish green candle, trying to break out a second last candle coming from that overall to the right-hand side. It also formed a pattern to a left-hand side, but dropped that market down. So we'll talk about that overall. So if price action breaks out of the current price of 171.372, it's headed to the midpoint, which would be second level high. So that'll be near the numbers of 201.790. Well, let's drop it down a little further. 199.329. If price action drops down, it can tag that red SR lines, look like it's right on it, but it's actually above it, which would be near the numbers of 171.300. If it drops below that, it's headed to the next area, which will be in the midpoint. That'll be second level lows, nearing the numbers of 145.187. So let's take a look at if the market pushes up, where is it coming from? So the market pushed up from price. We can see when the market came down for that red and green touch, created that overall first leg, second leg, and we can see this is where price is trying to break out the SR line and create that double bottom. So once price breaks out of the SR line, we have to wait to see if we're gonna see if it's gonna be a bullish green candle. It's gonna push up to the following SR line or further up, or unless it breaks, identify a retest or consolidation before pushing up to the following level. But we are looking for the full break, the retest, or a bullish green candle work its way up. Now, if the market comes down, where's the market coming from? Let's go back a little bit. So when we go backwards, we can see the market has entered the zone area, and we have multiple touches. So when we look at those areas, it's identified the break, the retest, break, retest, break, retest. So we have a total of solid touches, first, second, third, fourth. So we have a double top. So market came back to retest that double top twice with current price in the previous area, and we received the first, second, third, and if market drops down, it's coming from a double top and create that formation. So market will be coming from overall double top and a double retest if it pushes down, unless we receive that consolidation within inside the second to last candle, or let's say that the top of the SR line to the bottom SR line, that'd be a huge consolidation. So we're waiting for the pattern to break out the area. Walking down to the 6-month time frame, so price action on the 6-month time frame, reading as a bullish green candle. Second last candle is a bearish red doji. So what's happening between price second and third last candle? Price is the push, second and third last candle is a consolidation, and we can see it's coming from that pattern. So basically overall, if we look at it, it'll be first, second, third, fourth. Retest with the second last candle and price actual breakout, but we're looking for price to break out the SR line. If we're paying attention just within that area, first, second, third, fourth, retest, one push, retest, second push, unless I said before, unless it's a bullish green candle. Walking down to the 3-month time frame, so price action on the 3-month time frame is reading as a bullish green candle. So let's say if this area is denied from the third to last candle, which would be at that SR line, and say it drops down, where is it coming from? Just within this area here in the price, it created a pattern. So let's talk about it. So overall, when that market did spike up with that the third to last candle, that's identifying a first leg, second leg, third leg. If it pushes down with the bearish red candle, you'll see that double top in that area. But so far, we're looking for the breakout towards the third to last candle, highest of that wick, and the fourth to last candle, the bottom of that wick. So anything within that area is a huge consolidation. When you combine the third to last candle, fourth to last candle, this becomes a huge doji. So that's all that is, a huge doji with the third and the fourth to last candle. So we're looking for the breakout of that doji. Walking our way to the monthly time frame, and we can see that huge doji that performed itself, identified itself, and that's the price second, third, fourth, fifth, sixth, seventh, eighth, ninth candle in the market. Huge doji. So we do see it going straight across. So the cross of that doji will be the support. This is why the fourth, third, second is, or I should say primarily second, third, the fourth and fifth created that support right below it, and then it pushed up, because whenever you have a SR line or some type of doji cross or some type of identification that is trying to create some support resistance, if you take a zone and you place it above that SR line, a little bit above, a little bit below, price can still go into that area. So let's say we drop it down towards the bodies of the fifth and sixth last candle, 2, 3, 4, the fifth or sixth last candle in the market, and we drive it up to the third last candle body, all as a zone area. So we can see that that market is respecting that zone multiple times to the left hand side for that first, second, third, fourth retest. One second last candle is a retest, is a doji, and that's the third push. Retest again with price action. So we're going to see if it's going to push out unless it returns back to that zone area, which would be the overall area of that doji cross. So we're going to take that doji cross. We're going to create some SR lines on there. Let's go. Let's grab the we can grab the top of that doji cross. Let's grab the midpoint of that doji cross where that horizontal line is at, and we'll grab the bottom of that vertical doji cross. So these are levels that can be respected, a little bit above, a little bit below. Walking down to the weekly time frame, so price action weekly time frame, bullish green candle spike up to the high. So this area right here with the price action could be identifying a reversal, just like the previous side. Previous side got a bearish red candle, spiked up, lost momentum, came down. This can do the same thing. Following candle can follow up with the bearish candle and push down unless this is respected as a retest. So it identify as a break, a retest, and we'll see if it's going to follow with the bullish green candle. Headed down to the daily time frame. So price action on the daily time frame is reading as a bearish red doji cross, spike up to the high, second last candle, bullish green doji. So we're going to take a SR line, a zone, place a little bit above, a little bit below the second last candle. So as we walk down the time frame, we know that market's consolidating because price action within the previous day candle, which is the second last candle in the market. So on the 4-hour time frame, what pattern did we receive in that consolidation? So we have that pattern. So it spiked up to a high. So we see that first, second, overall, third. And if it pushes and break through, it'll create that double top and break through. But we can see that price action could be identifying as some support. It's a long wick down to that bottom side. So if so, coming down in red for that first, second, third, that means it can be respected with the price action and push up with a bullish green candle and create that double bottom formation. Walking down to the 3, same as well, bearish red candle. 2-hour time frame, have that consolidation. So that's still identifying as one touch, market pushed up. Second touch, we're going to see if it's going to push and break out of that. Even though price action bearish red candle, primary candle is a second last candle being a spike down to a low. So that market can be respected unless price action breaks through the second last candle. Then when you see the break of that second last candle, you look for the retest to see if it's going to push down further unless it creates some momentum towards the bottom of that zone or below the bottom of that zone and work his way up. Okay, guys, this is GBP JPY.